Blog Talk Radio.
Good morning and welcome to TimeToPlay.com's Empower Half Hour, where each week one of the professional resources from the Time to Play website provides discussion and tips on how we can enjoy life. Today's professional resource is Carl Jansen. He's a professional on Time to Play under Work-Life Balance section, and the intention of Carl's articles is to provide tips and info so you can work smarter and get out of the office faster so you can enjoy life. Carl's article right now on the Time to Play site is How to Get Out of the Office from an Accountant's Perspective. So good morning, Carl.
Good morning.
Our topic today is a single word that could put fear into the best of us. Anybody know the word? Taxes. Yes. So I want to give you guys a little background about Carl. He started his public accounting career in 1989. He's currently a partner at Covati & Jansen, CPAs PC, a firm which provides financial and tax advice to large and small corporations, partnerships, limited liability corporations and partnerships, as well as individuals. Carl has experience with audits, tax reporting and compliance, business valuation for buyouts, estate gift planning, divorce, and merger purposes. Carl's completed the American Institute of Certified Public Accountants Business Valuation Certificate of Educational Achievement Program and the National Association of Certified Valuation Analysts Business Valuations Fundamentals, Techniques, and Theory coursework. And together, these two programs help him on the techniques and theory of business valuations, and he is certified in that, which is very unique for an accountant. Before I get started, I wanted to introduce myself and a little about Time to Play. My name is Doreen Guma. I'm a board-certified healthcare executive, and I've worked in healthcare since 1987. And I've seen the sick and sad, and I started this project as I was turning 45, when you kind of evaluate yourself and see how you did and where you're going. And I realized the one thing I needed was to learn how to enjoy life more. It's great to identify something, but it's better to find solutions. So I gathered some amazing people, and of course Carl is one of them, who give their time and talent to write articles for the different components of the Time to Play philosophy, which is you have to be happy, healthy, have money, and a work-life balance to enjoy life. I don't pay them, and they don't pay me. We just truly believe in this helping people philosophy to help us all working together to have a better life. So check out Time to Play to get some resources so you can have a better life. And you can ask any of our professionals a question, no fee. The thing that you're wondering can also help someone else, and that is, again, the basis of the People Helping People project. We're building a discussion forum also that has great information and resources, and this is not a Facebook. Its intention is to get what you need to get out there to enjoy life. Everyone has something they can offer that can help someone else, so check out Time to Play and participate. And after all, through helping each other, we help ourselves. One last thing, I started reading The Power of Now by Eckhart Tolle, and I started a discussion on the forum under book club and book reviews, so if anyone wants to join me in my journey of discovery, I'll be posting about what I read last night in a little while. Okie doke. So let's start asking Carl some questions to help us get through tax time. Hey, Carl, let's start with business. We're going to talk about what's new for 2011 for business taxes. Give me a little info on, Carl gave me this huge list of bullets. We're going to try to cover everything. Merchant card and third-party payments reporting. What in the world is that?
What's starting to happen is people like MasterCard, Visa, American Express, and Discover are issuing to their business clients what's called a 1099-K. And probably some of the business professionals have seen this already if they accept that type of payment for their invoices. And basically what it does is it reports to the IRS what Visa and MasterCard have processed for that taxpayer. And what this does is there's a line on like the 1120S, which is the S Corporation business tax return, lines 1A through 1D, if you look, there's revenue, and one line on there says merchant card payments as reported to you on the 1099-K. Now, they're not required to fill that out this year because the IRS has basically deferred it until next year. Yet, you got to make sure that you're accounting for all your merchant card revenue properly. The worst thing that can happen is that you don't report gross revenue at least as much as or higher than what's reported to you on the 1099-K, because then the IRS is going to say, well, wait a second, I know you processed $100,000 worth of credit cards, yet your revenue is only $80,000. What happened to the $20,000? And if it's the type of business like a restaurant or a toy store or something like that, which would also be taking cash, I would expect that your revenue would actually be higher than what was reported to you on the 1099-K. So, you should see this in the mail already. I know several of my clients have gotten it. I've gotten a phone call, what's this? What do I have to do with it? How's this going to affect me for tax purposes? And if you're doing everything right and you're accounting for all of your revenue anyway, it really should be a non-issue. But it's just something to be aware of out there.
So that's something interesting. So they're trying to identify and capture all of the revenues that a person is getting because I guess they're feeling that somehow people have been underreporting.
Right. And I mean, the big thing here is, PayPal and eBay. A lot of people running businesses through the eBay site and maybe not reporting all that business. And now you're going to, have to come up with that reporting. So I mean, the IRS is getting very sophisticated. Congress is supporting them when it comes to, new reporting in order to capture lost revenue and to close the tax gap, which, they always report that there's like $300 billion of revenue out there or taxes that are simply not reported on an annual basis. And the IRS is serious about trying to, close that tax gap now. And this is one item that they're using to do so. Interesting.
What do you mean with cost of goods sold reporting? Is that kind of the same topic? Is this, in order for you to show the revenues or?
Really with the cost of goods sold, on the tax returns, you always filed a Schedule A with like your 1120 if you're a C corporation, or if you're an S corporation on your 1120S, you'd file a Schedule A along with that. And that was at the top of page 2. And basically, you'd start with inventory, add your purchases, cost of labor, and other costs of goods sold, and then subtract out your ending inventory and come up with your cost of goods sold. And for some reason, this year they've changed that. They've done away with the Schedule A, and now cost of goods sold is reported on Form 1125A. So it's just something to be aware of. I don't think it has been changed for any reason other than probably to ease in the processing of the tax returns. But, these are changes that have been made by the IRS, and we just wanted the business community to be aware of them.
Mm-hmm. The Form 1099 questions on returns?
Yep. I think as a practitioner in the past, what I've seen is that, people don't treat the 1099 filing as seriously as they do the W-2 filings, but you really should. 1099s are required to be filed for people who are not your employees, but are not incorporated and are paid more than $600 for the year. That's probably the most popular one. You're also supposed to file a 1099 if you pay somebody rent. There are other reasons to file it too, but those are probably the two most popular reasons. And the IRS is just asking a question on Schedule B on the 1120S, and they have similar questions on other tax forms for like the C corporation filings as well as partnerships. And they're basically saying, questions A and B, did you pay anybody as a non-employee? and did you file the proper Form 1099?
Mm-hmm.
In the past, like I've said, people don't treat that form as seriously as they do the W-2s, but for each form that's not filed for the year, it could be a $50 penalty. So, the IRS, if they do find out that you're not filing the 1099s properly, they could impose a $50 per form penalty. So, if you pay 4 or 5 people, it could be a penalty of $200 to $250. So it's definitely something to watch.
Absolutely. I know this has been something, I guess, over the past year or 2 years about the misclassification of workers as independent contractors, because I know people were trying to get away with paying taxes and stuff on them. So what is new with this? What is this relief program?
Well, usually these problems start with misclassification of workers when somebody who thinks they're an employee goes to file an unemployment claim. And when that happens, now New York State's involved, and they say, well, if we have this person that's working at this company who's a misclassified employee, then maybe they have others, and they open an investigation, and it becomes a headache for the business owner. And this is a very gray area of the law. Everybody, if you do have people you treat as independent contractors, you're probably aware of the 20-point test that the IRS has. That basically is a number of questions. And it tries to put into different columns. Well, if you have this attribute, then you are more like an employee. If you have this attribute, you're more like an independent contractor. And over the years, I think the IRS and New York State have gotten much more aggressive in just saying, hey, you know what? These people are employees, and we want you to withhold taxes on them. And it's
interesting.
Yeah, it's definitely a hard thing to fight. But IRS came out with a new program. It's called a New Settlement Offer for Misclassified Workers, and it's a voluntary classification settlement program. And you have to hit a couple of bullet points to make sure that you qualify for this program. The employer has to agree to pay 10% of the employment tax liability that may have been due on compensation paid to the worker. So if you paid somebody $50,000, and if they were an employee, you were supposed to withhold $10,000, the IRS wants you to pay 10% of that, or $1,000, for the most recent tax year. You're not going to be liable for any interest or penalties on that liability. You will not be subject to an employment tax audit for the worker classification of the workers prior to that year end. So, people who may have people that fall into this gray area for 2011, even though you're past the point of filing your 941 form and your W-2s, you may want to consider going back and looking at that and saying, hey, maybe I should adopt this voluntary disclosure program, because then I'm locking the IRS out of, 2010 and prior. Mm-hmm. And, of course, you got to give a little bit, too. You got to agree to extend the period of limitations on assessments of employment taxes for 3 years. So basically you're giving the IRS more time to look at your records going forward. But that's big, and I know everybody thinks that they might be in that boat alone, where you have this issue of misclassified employees / independent contractors, but it's a very popular issue, and the IRS realizes that, and I think they're trying to kind of extend an olive branch to the business community to say, hey, let's put this behind us, because we're wasting a lot of time and resources fighting this. And
well, that might be something that we would like to have you do for the next article, maybe the 20-point test,
okay.
And the this new program that the IRS has for forgiveness. So I wanted to get through the one last bullet for the business, and kind of we'll have to whip through the individual what's news, because, of course, we run out of time so quickly. So much information. The simplified payment plan options for tax debts less than $25,000 and from $25,000 to $50,000. I assume that's for a business who doesn't have a good accountant who's keeping an eye on what they are paying and how they're paying through the year.
Yep. Sometimes what happens is you fall behind on employment taxes, and or other taxes, and the IRS understands that we just came through a recession. Everybody's still recovering, and if you have less than $25,000 in total tax debt to the IRS as a business, there's a 1-800 number that is on the notice. You call that number, or your accountant can call that number if you sign a power of attorney form for him or her, and they can simply set up a 60-month payment program over the phone if the debt is less than $25,000. What's a great benefit to this program is, first of all, you avoid further collection action. So you don't come into your office one day and find a tax levy on your account. So that puts that fear out of your mind if you set up a payment program, but you've got to address it. Then there is no federal lien filed on the corporation, so it won't impact your credit worthiness when you go to get a loan or a line of credit with the bank. So, and yes, penalties will still continue to accrue over that 60-month period. You can tell the IRS when you wish to pay it. You can tell them between the 1st and the 25th of the month. They may send you coupons to remind you to pay it. They may not, but it's up to you once you make the agreement to follow it. And you must stay current on your taxes now. So it's a great program, and you don't have to file what's called a collection statement with the IRS, which is a huge document that you have to basically tell the IRS everything about your operations and your debt and your income and your customers in order to get a payment agreement. If you owe them between $25,000 and $50,000, they're still very agreeable, but they will require you to file a collection statement, which is basically a balance sheet and income statement. And what I just discussed, you're going to have to put a little time into it, or your accountant's going to have to put a little time into it to get them to accept the payment plan. But, the one thing you can't do with the IRS is ignore them. If you do it, they're going to, they're going to do what they have to do to protect their own interest.
Absolutely. All right, we have 10 minutes.
10 minutes.
What are the most important points for the what's new for individual taxes that we really should know out of this list? Because, I don't know which ones to choose. It's so long.
Right.
What's something that we should know for individual tax return prep?
Well, people on Long Island probably hear the word alternative minimum tax all the time. And that's because we live on Long Island where we have very high school taxes, and we also have very high property taxes as well as income taxes. And those items are added back when determining the alternative minimum tax. What's the alternative minimum tax? Briefly, it's a second way to calculate your taxes to make sure you're paying your fair share. It was first instituted years ago for the very wealthy who were able to kind of manipulate their tax bill to the federal government by paying, state taxes early or state taxes later, or prepaying their real estate taxes, or doing other, shenanigans, as we call it, to reduce their taxes. And what Congress basically said was, hey, we're going to make an alternative minimum tax. We're going to make you add back certain items, but then we're going to give you a standard deduction. And the standard deduction was increased for 2011 to $48,450 for individuals and $74,450 for married couples. But I just wanted everybody to know that the alternative minimum tax is out there, and it's definitely something that you should watch. Years ago, IRS came up with, or Congress came up with, the first-time home buyer's credit. Basically, that was a loan by the IRS to homeowners who bought a house at a specific time, and it was their new home, their first home, and it was like $5,000 credit, but then you have to pay that back $500 every year to the IRS. So People who took advantage of that credit should get a statement in the mail from the IRS reminding them to pick up their $500 that they have to pay the IRS back this year. But even if you don't get that form, you got to make sure you remember to do that.
What happens if you don't?
You will probably, I am sure, if you are due back a refund, receive a refund for $500 less than you expected. Or if you owe the IRS money, you will probably get a bill from them that says you still owe us another $500. So, the IRS.
So they're definitely tracking that. Like it wasn't a freebie when they said, "Oh, you're gonna tax credit for buying a new home." So interesting. What else is there? Something that's so important? What about the health insurance deduction?
Well, now your health insurance deduction will be taken still on Form 1040, line 29. It's an adjustment that helps you come down to your adjusted gross income. You no longer deduct that on Schedule SE, which is self-employment tax. So what that means is, you are going to pay your self-employment tax on your health insurance premiums that you pay through your small business or your sole proprietorship. If you file Form Schedule C, profit and loss from a small business, you're going to have to pay Social Security tax on the health insurance premiums that you pay for yourself throughout the year. So that's something to be aware of. And also, probably the other important thing is that many people converted traditional IRAs to Roth IRAs back in 2010. And for 2010, they got a freebie. They didn't have to pick up that income on their income tax return, but the IRS said, hey, you got to pick it up one half in 2011, one half in 2012. So you got to spread that liability over a couple of years, which was great. But people may forget that they did that, but the IRS won't forget that you did that. So it's important for you to make sure you tell your accountant, or if you prepare your own taxes, that you pick up one half of that rollover in 2011.
Question: How in the world could you possibly know all this stuff? I mean, it's mind-boggling, and this is only like the tip of the surface, right? Like, so what do you suggest to people and how that they can find out all of these obligations, and also hopefully some things that they can deduct in order to, not have to pay more taxes?
Well, the IRS does a really good job at making information available for people, but and you can go to irs.gov to get that information. But I think it's best for people to work with someone who understands the rules and regulations and has a conversation with those people. I know a lot of people who prepare their own taxes using TurboTax or going to the irs.gov website, and they file electronically themselves. But, those websites and those computer programs don't give you feedback if you have a general question or a question that might relate to, your mom or your sister who's having a problem with something, and you want to find out from a professional, what they can do for tax planning purposes, or what even you can do for tax planning services. The only thing that software is really trying to do is get you to file your tax return that year, and that's it. It's not giving you any feedback about tax savings plans and things like that. You should really be, I think, you can search out the information yourself, or you can work with a tax professional who you trust. And that tax professional is really charged with, keeping up on these things. And where that comes from is, we have information services that constantly update us each day on recent changes in the tax code, planning opportunities for clients, and recent tax law cases that could impact our clients.
Excellent. All right, I have 2 questions left. We have 5 minutes.
Okay.
How much does it cost to do taxes through a professional, and how do you find a good one? That's one question.
Yeah.
And the other one is, what can I do now to reduce my tax bill in 2012? So let's get these two answers because this is like important for me to know. So,
if you look at going to like an H&R Block or even a tax preparer or a CPA for a simple tax return, you're probably looking at somewhere between $150 and $500. Just that's probably the range for a 1040 form with somebody itemizing deductions like a homeowner, maybe taking some tax credits on college education and things like that. So that's where I would feel, and that's where our pricing kind of falls in. Where do you find one? Google. Seems like that's where it finds somebody. But talking to people too,
True.
Who do you use? Why do you like them? Why don't you like them? What does she do for you? It's good conversation. But I think a lot of people start with Google. But I would probably recommend talking to people. If you're a business owner, and you go to trade meetings and things like that, ask people around, around the table, who they use. And
right.
We're a small community. Usually, somebody has heard of the tax professionals out there and can give you a good opinion or a bad opinion, let you know what's going on.
Well, Carl does ours, so he's pretty cool. We had a very bad experience a few years ago when we wound up having a big situation because we trusted somebody who just did not do a good job. So it is very important to get the right person. I want to, before we go into that last question, and we're really almost out of time, I want to give everybody Carl's contact information. You can go to timetoplay.com. He is there under work-life balance, or you could call his office at 631-246-6300. His email is cjcpas@aol.com, and you can go on Time to Play and get that. Next week, 222 at 9:30, Andrea Feinberg is an author and business coach on Time to Play. She's amazing, and we're going to talk about the 3 surprising keys to small business abundance. Don't forget that the podcasts are available on demand. You could go back and listen, tell a friend, they could listen. Carl gave some good information that everybody needs to know, and you could see what's archived and stuff on the Time to Play podcast page. I'm very proud of the information we're putting together. So, Carl, we have 2 minutes. What can I do now to reduce my tax bill in 2012?
Going forward, I'm a big fan of putting money into retirement plans. Even if you don't offer a retirement plan through your company, but you want to put money away for yourself, you can put money into an IRA. That's $5,000 limit. There are also some other limits that you got to watch out for in case your spouse or you have a 401k plan at work or a 403b plan at work, depending upon if you work for like a university or a government agency. But I think putting money into retirement savings is probably the simplest way to reduce your taxes. And also keep good records for yourself. So many people come into my office and I ask them, well, do you give money to charity, and have you given clothes or other household items to charity? And it's like, yeah, but I don't have a receipt, or I didn't even think about adding that up for you. And those are deductions that are right there that are there for the taking, and people forget about it because they're too busy living their daily life. And just have a file at home that just says, taxes 2012, and if somebody picks up clothes, for, Vietnam vets or the Lupus Foundation, throw a receipt or at least a list of what you gave away in that file. So at the end of the year, you pull it out and you say, wow, I gave away a lot more.
Ton of stuff. I understand. That's very important. So keeping receipts and doing some retirement savings, which is always a good thing, in anyway. So I would definitely recommend finding somebody, because truly the $150 to $500 is a lot better to spend than having the problems. I want to thank Carl so much for taking time out of the busy time of the year to give us some tips and some words of wisdom.
Yep, I appreciate it. If anybody has any questions, I'm always available.
Thank you so much. And you could write a question on the Time to Play site. So thank you again, Carl, and have a wonderful day.
Thanks, guys. Take care. Bye-bye.